Welcome to Chapter 9, and in this chapter we're going to focus on payroll processing. In the last chapter we did payroll setup, and now we're actually going to compute payroll. And not only are we going to compute payroll, but we're going to pay the related taxes that come with the payroll obligations. And not going to spend a lot of time reading these slides. You can pause these. Okay, so when we have a paycheck, it's going to show an entry that shows a debit to salaries, or it could be wages expense. It then will have the Social Security, Medicare, federal income tax, state income tax, and then the net amount that goes to the employee. And again, you can change these account names to suit your company, although you probably don't want to mess with the tax ones. And this is not so much a QuickBooks issue, but just an accounting issue in general. Setting up a separate segregated bank account for your payroll is an incredibly wise idea. And that's because you want to keep all of the payroll tax and liability expense related money separate from your operating funds. You don't want somebody to think, oh, look at the balance in our bank account. That's all our money to spend. It's not your money. It belongs to Uncle Sam or the state or whoever your taxing authority is. But keeping your payroll separate makes things very convenient, easy, because you don't have to look in the account and think, why do we have all this money in our bank account? Because it really isn't yours. And so there will be a point at which during the payroll period, or at the end of the payroll cycle quarterly, that we have to actually send this money up to the government. And so we will have journal entries that result in that reduction in cash that show where all of these are going. And the reality is, when they're paid, they're going to potentially not show up all like this, because this is paying all of your federal obligations at once. And your FUTA may be something, depending on your company, that you only have to pay once a year. If it's below the threshold, it's only due once a year. I paid $42 a year for FUTA just on myself. So that's not something I have to worry about until the end of the year, as opposed to these other transactions that you want to make sure that you remit on the payroll schedule that your company is obligated to deposit with the government on. And it's different for everybody depending on the size of your payroll. You will also have potentially state payroll liabilities that you have to address. Even though New Hampshire doesn't have state income tax, it still has unemployment that has to be remitted. And so if you were in Vermont, you would have both of these taxes, but they wouldn't be in one transaction, because those are two entirely different taxing authorities. The income tax is taxed through the Vermont Department of Taxes, and the unemployment is through the Vermont Department of Labor. Separate branches of the government, separate returns, separate everything. And so those are not things that you want to do in one transaction, because both of it will, you will have both of them ending up in the wrong place, or one of them at least will end up in the wrong place. So as with the other major functions in QuickBooks, our vendors, our customers, we have Employee Center. And the Employee Center gives us a sort of a dashboard look at each of our employees. We can drill down and look at all of the employment related activity for this current tax period, prior tax periods. And so it's kind of a nice at a glance. And you can also filter between active and inactive employees. So that's helpful when somebody's no longer working for you anymore. You don't want to get rid of their information, but you also don't want it mucking up your employee view here. And so I'm going to jump over there in a second, and we'll actually go through how to add an employee. So I will scroll very briefly through this, and you can again pause to look at these things a little longer. And now I will, before we actually pay people, I will go over and we'll set up the new employee. Okay, so here we are, we're in our employee center, and we've got the ability to add a new employee here. This is something that you want to do when the employee is hired, not when you're trying to process your payroll, because that'll just make processing payroll a whole lot harder than it needs to be. And so having the correct legal name, social security number, you want to have all of their new hire documents, their I-9, their W-4, all that stuff, so that you've got all that and you're able to plug it right in. Disability, if you've got to have some accommodations, this kind of serves as your almost your personnel file as well for employees. Address, billing rate level, payroll, and so we don't have a payroll schedule in here that is different from, because we don't have a subscription. So but we want to make sure that we have the correct filing status, the correct number of allowances from the W-4. You don't have to worry at this point about advanced earned income credit, but you've got your federal and your state, and we haven't chosen a state. If there is some other kind, if you have a local tax or something that you need to withhold for, I know it's going to continue to be unhappy with me. And then if you've got non-resident alien withholding, you've got to pay attention to that too, but that's beyond the scope here. This also gives you your, your hire date, if somebody's come back to you, what their job is, if they've got a target bonus, what, are they full-time, part-time, are they exempt from overtime? That's particularly important. You also need to know if they're a key employee. Most people are probably not a key employee unless they are running the company, related to somebody who's running the company, or in some sort of executive type role. So that's not, unless you're in a very, very small business, and that's particularly important when it comes to retirement benefits. And so again, beyond the scope of this lesson, but knowing whether or not somebody qualifies as a key employee is important, because certain tests have to be made for retirement plans if the company has one. If they've taken a leave of absence, and any termination, any severance pay, any details. So again, you can kind of use this as your electronic at a glance HR file. And then you also have the ability to indicate whether or not the employee is inactive at some later point if you decide to do that. And you can also attach documents. We don't have anybody in here, so it won't let me attach anything. But if you, maybe the person got a reprimand letter and you're going to put that in here, although if you're going to be putting all of this payroll information in for this person and HR stuff, you want to make sure that you've limited who has access to it, because you could get yourself into trouble. Any to-dos, if you've got to track whether you're, somebody's got a license that's got to be renewed, whether they need physicals for a DOT exam, something like that. You can track all of those things. Any notes, emails, You can track your communications with the employee. So lots of things that can be done here. And sales reps can be added. They are not employees. These are people who are going to be paid on commission as opposed to an hourly employee. And you can put them in there because it allows you to then generate 1099s for them at the end of the year also. And I'm going to actually stop this video here and go on to the next video for the actual processing of the payroll.